Most people see a market report and think, what am I looking at? Let's fix that. Hi, I'm Jeffrey Hoffmann. Real estate market reports can feel like alphabet soup. Days on market, inventory, absorption rate, median price. But once you know what these numbers mean, you can read the pulse of the market like a pro. Today I'll walk you through how to interpret a real estate market report, what stats actually matter, and how to use them to make smart buying or selling decisions right here in the Hudson Valley. Why market reports matter. Market reports aren't about prediction, they're about understanding momentum. They help you see whether conditions favor buyers or sellers and how fast things are changing. For example, if homes are selling in days instead of weeks, that tells you buyers are motivated. If prices have plateaued or dropped for several months, sellers might need to adjust expectations. Think of the report as a weather forecast. It doesn't decide your plans, but it helps you prepare for what's coming. Market data doesn't tell you what to do, it tells you when to act. Now let's look at key metrics and how to read them. Inventory and supply. Inventory is the number of active listings on the market. If inventory is low, there's more competition for each home, which usually pushes prices up. If inventory is high, buyers have more options and sellers have to price strategically. A balanced market typically means about 6 months of supply. Less than that is a seller's market, more is a buyer's market. Inventory shows you who holds the advantage. Next, the number that everyone hears but few people interpret correctly, days on market. Days on market tells you how quickly homes are selling. If your area's average is 20 days and your listing sits for 60, something's off, likely price or presentation. On the buyer's side, short days on market means you need to be prepared to act fast with a strong offer. But remember, averages can be skewed by outliers like luxury properties that take longer to sell. Your agent can filter days on market by price point or town for a clearer view. Days on market measure urgency for both sides. Now let's decode the headline number everyone fixates on, price. Median price and sale to list ratio. Median price shows the middle point of all sales, half sold above, half below. It's a trend indicator, not a home value estimator. If median prices are rising steadily, demand is outpacing supply. If they're dropping, buyers have gained leverage. Pair that with the sale to list ratio. How close homes sell to their asking price. A ratio above 100% signals bidding wars. Below 97% means sellers are negotiating. Median price shows trend direction. Sale to list ratio shows intensity. So how do you use all this data in a practical way? How to apply market data to real decisions. For buyers, watch days on market and sale to list ratio to gauge competition and timing. For sellers, monitor inventory and price trends to position your listing for success. And remember, real estate is hyper-local. What's true for Westchester might not match Dutchess or Putnam. Use reports to ask better questions, not to chase trends. Pair the data with an expert who can interpret it for your specific neighborhood and price point. Numbers guide strategy, local context shapes results. If you'd like a clear monthly snapshot of what's happening here in the Hudson Valley, subscribe for my Market Updates series. I break down the numbers so you can actually use them. And if you want to know how these trends impact your next move personally, let's talk. I'll show you what the stats really mean for your street, your home, or your next offer.